All right, awesome guys, and welcome back. We are actually moving right along. We talked about the personal banking blueprint, the traditional banking system. We talked about how we were funded. We talked about how we would structure our debt to be able to eliminate it fast. Now we want to talk about maximizing our savings and recapturing interest. Okay, that's what we're going to talk about in this chapter. And so we'll discuss strategies on how to increase your savings, techniques to turn interest from a liability into an asset, and then what practical steps we can actually implement with these strategies. And so savings matters. It's a really big deal, guys. Increasing your savings is crucial for building wealth. Having a financial cushion provides security and peace of mind. We don't want to stress over money. And savings can be used for investments, emergencies, and your future goals. And so this is super important because remember, the traditional banking system is already set up in a way. And the financial system is actually set up in a way that 74% of your lifetime earnings is going through interest and taxes, leaving you 26% to try to live off of. And so by slashing that debt, recapturing interest, we get all that money back. And now what are we going to do once we get all that money back, right? What are we going to do? Well, we're going to grow our wealth. Interest payments are often a major financial drain. We're not going to have that drain. And we're going to redirect those interest payments to efficiently boost our savings. And so there's some smart saving techniques that we want to actually talk about. Number one, we have to automate our savings by setting up automatic transfers to our personal banking account, our own bank. You see, the original direct deposit goes to the bank. And normally our next move would be after we get paid to start paying bills. Okay. Within the personal banking blueprint, we actually want to do things a little differently. After we get paid, the first person we want to pay is ourselves. And those dollars are going to go to our own personal bank. Okay. And we want to automate that. Okay. We want to automate that. And we actually want to reduce unnecessary expenses in order to increase that amount. So what we need to do is we actually need to take inventory of all our bills and where our money is actually going. One unique thing about us is we have a way to be able to leverage AI to be able to help you not only structure your snowballing in the most efficient way, but also we leverage AI to help us get a glimpse of where we can find money to fund our personal bank account. We actually use money that you're already spending. So we just take it from A and fund it to B. A lot of it actually comes from recurring expenses. Recurring expenses. You'll be surprised. I remember I did this for myself. I literally had $800 a month of recurring expenses that I was able to go back, capture, and actually fund my bank account and start blasting my debt away, allowing me to recapture interest that was planned on being paid out and increase my savings. It was just amazing. And so, yes, we use artificial intelligence in our budgeting tools to track our spending, to find what money that we can actually use to be able to get this back. And you'll have that availability if you get to work with us as well. And so, methods and techniques to recapture lost interest. We want to pay off high interest debts quickly to reduce those interest payments. We want to leverage the policy loans from our life insurance, our own bank. And then we want to reinvest those monies that we save from reduced interest payments into high yield savings accounts or investments. You will get to a point that you cannot stuff any additional money into your own personal bank without restructuring, opening up another bank account. Okay. The IRS, the government, they know about this. They leverage it themselves. And so they have set limits on how much you can actually fund it. It's our job to maximize that and get as close so that we can reap the full rewards of what it is that we're actually looking to achieve. So again, set specific saving goals to track your progress. It actually becomes fun to be able to go through your spendings, see what other companies and what other individuals are making money off of your money, and go back and take it away from them. And now fund your own personal bank account. Just watch the calls. Watch the friction you get when you start interrupting traditional banking and lending processes. You can feel it. You can feel it. Take advantage of employer-sponsored retirement plans and contributions. Guess what? There's some steps, there's some things there to be able to help you, right? And so if they're getting a 3% match, you want to take advantage of that 3%. But I can let you know right now that if you're actually funding, let's just say your 401k, and you're funding at 10%, but you're only getting matched 3%, that's 7% that you can actually take and put in your own personal bank that you can use to get out of debt and build wealth faster on a tax advantage basis. Retirement accounts like our 401ks is not on a tax advantage base, meaning that it grows tax deferred, but it's taxable at the end. And so we spoke about it earlier. If taxes will be higher or lower in the future, we didn't know. But our personal banking blueprint, regardless of what it is, allows us not to participate in whatever those taxes are because we can actually access those tax-free. So again, that could be a way to find funding that you are already spending to actually fund your bank to help you get out of debt faster and live today. Not live when we get 65. We need to live today. The need for finance is even more important than a death benefit. Okay, the need for finance. We have to finance our living, our home. We have to finance the food that we eat. We have to finance the education that we seek for ourselves and our kids. Okay, we have to finance that heart attack, cancer, stroke that we have to overcome. We have to finance our retirement. But then we also have to finance generational wealth. This is a case study of my buddy John. He actually was able to leverage our strategies, and we found so much in recurring income that we increased his savings by 30% in 1 year. He did it by automating his savings and paying off high interest, redirecting those payments back into investments. He actually started an embroidery business and is doing quite well for himself. He no longer works for his corporate job. He actually works in his dream business of embroidery, and he employs his mother, which could use some additional retirement income. He employs other family members. He employs other people in his community, all from taking control of his finances. It's a beautiful thing. Okay. As a result, he not only grew his savings, but also began building wealth through other strategic investments as well. And this same thing can actually happen for you. Okay. So faster accumulation, increased financial security with a key word, flexibility, giving you the ability to achieve financial goals and more while reducing financial stress and having greater peace. Lack of savings, the traditional banking system, the traditional financial system. This thing is causing tons of stress. That's a big reason for divorce. It's the number one cause for bankruptcy, infidelity. It all comes from our lack of security, financial security. Okay? People don't feel protected, so they go out and they start doing other things that they normally shouldn't or wouldn't do. All right? So again, getting our finances where they need to be, overcoming the traditional banking and financial system, it's going to do so much more for you than just financially. It's going to improve on your marriage. It's going to improve on your parenting to your children. It's going to improve on your relationship with your faith, most importantly. Okay? It's going to improve on your relationship with your faith, your family, your fitness, your finances. It's going to put you in an overall better position to make you more of who you are, which is a great person. In conclusion, our call to action from this is we want to implement a smart saving techniques and methods to recapture the lost interest and follow the practical steps that we actually outlined to start saving more. All right. So again, I go back to get it in while supplies last. We can't work with everyone. So make sure you go ahead and click the link and book your spot. We don't want you to have to wait. Click the link, get on our schedule. Let's have that conversation to see if we'll be a good fit for you and you'll be a good fit for us. Okay? So that we can go out and get you on the right track financially. Thank you.